Okay, good evening, everybody. So today we're going to be talking about storytelling, right, for tax. We're just going to look at getting our story straight because, like it or not, when it comes to tax, everybody has a story to tell, right? So we're just going to touch briefly on that, on how to get your story straight before we basically take some questions and start the class. Uh, so the first thing we're going to look at, the first thing I'm going to look at is the two things the taxman is basically concerned about: your turnover and your expenses. Your turnover basically uh, means how much revenue or sales that you've declared, right? And they are concerned about this, especially because that's going to dictate how much taxes you owe. Because obviously, tax is a function of revenue. So, depending on whatever the tax may be it company income tax, value added tax, and all of that, right? How much turnover you've declared will determine how much taxes you pay. So if you are within the small business bracket, your turnover will decide that. If you are in the big business bracket, right, your turnover will decide that. Then also going forward, it is the turnover that would be used to compute whatever taxes that you owe, right? So they are very much interested in your turnover as a business owner, right? Now, when it comes to story that you're telling the taxman, for different type of businesses, turnover means different things, right? And I've basically listed the four common types of turnover, right? So the first one here is basically revenue or sales. This is common with people probably in the product business, right? So let's say you own a boutique, your turnover is your sales. How do I mean your sales? So you sell a shirt, right? Let's say you sell a shirt for 10,000 naira. That 10,000 naira becomes your sales or your turnover for that shirt. Now, inside that 10,000 naira, obviously your cost is inside. But because of the nature of business that you do, right, both the cost and the profit margin that you've added on top all together makes up your sales, right? For that kind of business, that is your turnover. However, on the flip side of things, if for instance now you own let's say a loan giving business, right? So let's say you give out loans to people, right? Like a small microfinance bank or somebody who does loans, a loan shark or whatever it is, right? In this case, uh, because of the nature of the business that you do, what becomes your turnover now is the interest that you charge people, right? Interest and penalties and stuff like that become your turnover. So when somebody pays you, let's say somebody owes you, let's say you give somebody a hundred naira loan, right? And they pay you 110. In this particular case, 110 is not your turnover. It is only the interest of 10 naira, which is on top of the capital you've given out. That becomes your turnover, right? So those are the consideration. Then another scenario where you need to get your story straight is your service charge, right? So let's say, for instance, you are an installer, right? You install Wi-Fi, all of these things for people, right? And or let's say a very good example, let's say you're a plumber, right? Somebody gives you a contract to say, okay, we'll come and fix my house. Give me a quotation and all of that. So why doing that? You have to quote items that you'll be buying and all of those things for the house, right? In that event, let's say at the end of the day, the contract is let's say 100 million, right? But out of that 100 million naira, you are 90 million naira is actually for purchase of items that you be using. So in that regard, it will be an obvious choice that 10 million naira, which is left, is what becomes your service charge, right? So you want to structure your bookkeeping okay, in English, appropriately to ensure that it reflects that reality, right? So you want to make sure that you have your story right to that regard. And the last on my list for under turnover would be commissions. So how do I mean commissions? So commissions is basically this is very common with agents, right? Uh, let's say you are a house agent, you are a car agent, whatever it is. As an agent, basically you help people sell their products, right? You receive the body, and you remit it to the owners, right? Your business should be able to reflect that, which means that the total sales of that product is not your own. What only comes to you is the what's it called? Is the difference, right? Is the commission that you're getting, the commission that you've added on top. Okay, so your records, your stories, your financial reports should be able to reflect that. In that case, it means that when money enters through your account, only the commission that you've charged or the commission due to you becomes your turnover, right? Then for expenses, like we had mentioned earlier, we said there are two, how would I call it now? We've mentioned that there are two things the taxman is concerned about. The turnover, your turnover that you've claimed for the business, your revenue you claimed for the business, and the expenses you're charging on that revenue, right? So for expenses, you should know what constitutes of basically what I would like to call your cost of sales, right? Cost of sales simply is that, especially for product items, right? You're selling a shirt. How much did you buy the shirt? How much did it cost you, right? To make the shirt available for sales. The transportation, the cost from your vendors, basically all of those costs put together is what you basically want to call your cost of sales. Then you want to also look at what are the allowable expenses for your type of business, right? Obviously, allowable expenses are any expense incurred solely and reasonably so for that business, right? So, what are the allowable expenses for that business? Are you allowed to claim repairs? Are you allowed to from so basically I know most of operational expenses across even different sectors, be it repairs, utilities, and the rest, are basically allowable because obviously it's common sense. You need all of those things to be able to run your business effectively, right? But you just want to make sure that, okay, these operational expenses that you are doing, right? For some sectors, there might be particular things that are peculiar to your kind of industry. So I just had to put that out there. Then for the last one, which is non-allowable expenses, obviously this is a list of let's say personal expenses, right? Donations and basically expenses that's not made on behalf of a business, right? Is reasonably not done, right, or cannot be linked to the operations of the business. So that is that. And it will also be worthy to note that when it comes to claiming expenses against your revenue, right, the taxman will test you. That is the truth. I always say that in as much as we're trying to uh, avoid tax and the likes, right? Once you file reports and the rest, the taxman will not just agree, right? They will ask for proof. And uh, when you are doing your tax computation, whatever it is, once you've done it, you basically want to review it and go over it and make sure that okay, whatever things that you've quoted there, you should be able to back it up, right? I like to say this that the truth is, while it is easy to say, okay, you have bank records and the rest, right? How the taxman will see a 10,000 naira transaction is not the same way you will see a 10 million naira transaction. So it is just common sense to say that once the transaction is large and of a huge volume, you would want to need a third party documentation, right? Something to support your claims because they can easily tell you that no, the bank transfer is not substantial enough. You could have easily sent it to yourself or sent it to somebody else, right? Just to claim all of those expenses. So that is something I just needed to put out there, especially for large transactions. You want to be able to get a backup to substantiate what that expense is all about. Okay, so I think that's all I have for today. Basically, I just wanted to stress on the need to get your story straight when it comes to taxation in uh, uh, with respect to the new tax law or in terms of filing and compliance for your taxes. Okay. So I think we'll do some Q&A. Hello, good evening. Please, if you can hear me, if you have any questions or something we can discuss, we just have less than an hour left for our time.
Okay, good evening, sir.
Good evening.
All right, sir. So sorry. From everything you were explaining, I think I'm still confused about the expenses part. I
Oh,
quite
okay.
understand the turnover, but the expenses is not something I understand.
Okay. So do you have like a particular question or you want me to go over it again?
Not really. I would really appreciate if you can go over that part again.
Okay. So you know the way you have what's it called now? A profit or loss, right? Account.
Yes, sir.
Uh-huh. Okay. Let me see. I'm trying to see if I can get a screenshot of something that will not be viewed. Okay. Let me see something. Hold on, I just want to. Okay. This is an example of a profit or loss statement, right? You have your sales, then you have your cost of goods, cost of sales, then you have your operating expenses, then you have your net profit, right? So this is your tax computation will be very similar to this, right? So for this person now, we've established that the turnover is 78 million, right, for this
Mm,
period. So let's assume that this person is trying to file a tax. So the first thing you go to probably remove is the cost of sales, right? Then they'll get their
mm,
gross profits. Now, this all of these from cost of sales down, right, are basically expenses that the person is claiming against this revenue, right? So what
okay.
was said that whatever expenses that is here, fuel allowance, welfare, cleaning expenses, whatever that is here, right, should be something that you can claim against this revenue for that business, right?
Mm,
So what we are saying is, if the taxman opens your tax computation, first things first, this is what they're interested in. How much did you say you made, right? So for this
mm,
one, what they want to compare with is your inflow. It's very easy. So they will say, okay, where's your bank statement? How much inflow is there? How much did you clean that you made? Right. So they basically want to compare your bank inflow and the amount that you've declared in income. So they will not ask you, okay, most times, obviously, the one you've declared as income is lesser. Where is the difference? What's happening? Why is there a difference, right? Are you hiding revenue? That is the question. So it's not left for you to now define, oh, okay, well, this inflow is not revenue. This inflow is not revenue. I don't know if you understand. So that is for sales. That is how they look at it.
Definitely.
Uh-huh. So the next thing now becomes your expenses. Now, for your expenses, they don't go to your bank to be looking at your debits because does not benefit them. It's a waste of the time. What they look at is, okay, for your expenses, what have you claimed against this? Because what you've claimed against your sales will now determine what your accessible. So we now imagine that this net profit becomes your accessible profit, right? For that, that they will add their 30% on. So what have you claimed against these sales? So they look at the line items. They cannot say, cost of goods sold 66 million. Please prove it, right? If I say a 66 million naira account, the truth is this computation here will not, you cannot even get this from your bank statement. First of all, you need things like purchase receipts and some other schedules to be able to prove this, right? Because it's not cost of sales is not a very straightforward calculation. Okay, so first of all, you have to prove this. So they will not say, okay, prove me cost of sales. They look at this. Which other big figure is here? Salary. Please let me see your payee for this salary. If you say you are paying 2 million naira in salary, where is the payee for this salary? So they will not look. They will not disturb you with something like 19,000 naira. They can look. Okay, this one is 1 million naira. Okay, let's see where is this transaction coming from. Let's see this. What is going on here? They can also come. Okay, what is going on in utilities? Did you employ somebody? Where's the withholding tax? So that's exactly what they think. They pick some of the large transactions in your expenses and ask you to defend it, right? So when you're preparing, after you've done your this, you said before you go and submit, you should be able to, okay, just prefer ask yourself those questions that the taxman will ask you at the end of the day. Oh, okay, my revenue, how can I support this figure that I've claimed, right? Do I have invoices for all of these things? The inflow in my account, can I tell what is what, right? Uh, Basically,
Okay.
especially when you're making reference to what's it called now? Inflows that you do not classify as revenue, you should be able to explain them, and also look at your expenses that you are claiming against the revenue, right? So basically, that is just how it works. I don't know. I
All
hope
right.
I
Thank you very
answered your
much, sir.
question. Okay.
Yes, very well. Thank you.
More questions, please. Please, you don't have to ask questions solely based on what we treated today. Oh. The idea is just basically anything you want us to talk about, you can talk about it.
Okay, hi Mena. So please, can
I
you go back to the very first page about where you broke down the expenses and the um what's it called? The income and the expenses. The very first page before this
This
particular
was just a screenshot of a report I just put.
yes, the first screenshots is what I'm talking about.
Oh, okay. Oh, uh,
The very first one you were explaining.
yeah. Trying to see if I can get that. This
Yes,
one.
yes. So I want to ask a question, right, about this non-allowable expenses, right?
Oh,
So yeah, in this non-allowable expenses, the tax man is going to charge us, is going to tax this, right? Because it's not part of the company's expenses, right?
so what? So let if we go back to that list I was just sharing now. So let's imagine that, for instance, now you have listed a line item,
Mm-hmm.
right? Let's say, for instance, gifts. So, or should I say, donations, right? That you give us. So you not call it donations, or even gifts, right? You
Mm-hmm.
call it gifts. The taxman will say, this, what's it called? This is not allowable. So they will remove it. So by removing it, what it does is it now increases your accessible profit. So what they will just do is basically delete that line item, right? So if they
Mm-hmm.
delete that line item, it simply means that your expenses has increased. I mean, sorry, has reduced. So your profit, right,
Is
automatically has
is
increased.
more.
So if for
Yeah.
instance, if for instance now your profit was 10 million naira, if they remove a line item, your profit can now go to 15 million or 20 million. So it means that even if you paid taxes before, you are not owing a balance of that non-allowable expenses tax that you're supposed to have taxed 30%. That's basically
Okay,
what it means.
okay. So my question here is, how do we make, because somebody told me, or anything you want to do for yourself personally, just pass it through the business account, pass it through the business account. And here I'm seeing now that they are not allowable expenses. So how do we make these non-allowable expenses become an allowable expenses, if you understand what I'm saying? So
Yeah,
that
I
we
understand
don't
what you're
have to.
saying.
Mhm.
So first
That's
of
my
all, it
question.
deals with so first of all, it deals with how you basically treat the this thing, right? Uh, I always say what you call a transaction, right, is even
Mm-hmm.
much more important than what you do with that transaction, right? So if, for instance, now uh, uh, what's a good example I can say? If, for instance, now you are a director of a business, you own a business, and you know that, okay, oh, you have for instance, now your fuel cost you want to attribute to the company, right? And you're using it for this thing, company account to do this thing. Obviously, you add even like the one I shared. I think there was even a diesel cost to that,
Mm-hmm.
right? So
Yes.
the what's it called? When you are reporting for the business, you also add that cost, right? Your financials, that one is even easy, it's easy to claim. Everybody buys fuel and diesel for their generators for their business, right?
Mm-hmm.
Maybe another one would probably be, I'm looking for something else we can use because that one itself is very easy to claim. Because when you are buying fuel or whatever it is you are buying, and you are buying it
Mm-hmm.
from the business account, they will not tell you not to buy fuel for your business account. That was even a small expense. I'm actually looking for something else that
Something big. Let's say you go out.
exactly.
Let's say you go out now and you spend 1 million naira on Obule and you want to remove it from your company's account. So what are you going to write there to make it
Okay, so if you
an
spend one
allowable
million naira,
expense?
first of all, yes,
Because
yes,
it's a
yes.
big
So you can
expense.
classify it under entertainment, right? You can classify it under promotions. So it could be under events, this thing, right? Again, like I said, first of all, when you're spending that money, right,
Mm-hmm.
you should be able to, for an expense like that, maybe especially if you use a restaurant, they'll probably give you a receipt, right?
Yes.
It will pay if you can actually keep receipts for it. But
But
also when making that,
sorry. Okay, but
okay,
like keeping receipts in restaurants, mostly POS paper, and this thing
receipt
they
is
fade.
receipt. I get your point, right? So
So do
first
we
of
like
all,
take a
if
picture or something?
you can take a picture. Another thing is, if you are even say, if for instance, if you do a bank transfer, personally, first of all, if you are in this place, I would not recommend using an ATM card for your business
Mm,
account, right? Because your narrative will basically help, right? So if, for instance, you send money to a restaurant and all of that, they will obviously see the organization you're sending the money to, and you've
yeah.
not classified that money as food and entertainment. right? It's not a crime for you to entertain clients in your business. You get the
Okay.
point. Nobody's going to
Yeah.
force the taxman cannot tell you how to spend or run your business. They just want to make sure that the expenses you're claiming for that business is done for the business, not personal expenses, right? So how you classify the transaction is really what is important. So there's basically most transactions that you even do on personal notes that you want to attach to this thing. There's always also a name you can call it under the company end of things, right? Even as far as to your Go TV, all of those, they can your DSTV, Netflix, they can fall under subscriptions, right, for the office. There's most offices now. So when you go to, you see people having TV and having this thing. Those things are paid for by companies. This thing. So all of those, this even the food that you buy, the groceries and the rest, right? You can call it office supplies. That is just so. It just basically depends on how you tag it, right? Especially when you're
Mm-hmm.
sending, because most of those money said they're coming out in bits. So that when they do the bank statement analysis, you need to understand that most times the bank statement is basically the control. So if, for instance, now that's okay, this 2 million naira, where because most times in your financial report, what they are seeing is the whole figure, right?
Mm-hmm.
So it's not left for you to say, oh no, that's about 18 different transactions. You pull out the schedule, right, from your bank statement. You can filter it as, okay, these are the transactions that made up that 2.4 million naira. That's how basically you defend whatever it is that you reported. So you do the proper back analysis, especially when receipts and all those small bits are difficult to this thing. Your narrations and all of that can help you out because nobody is going to be faulting you why you don't have a receipt for a 10,000 naira or 50,000 naira transaction.
Okay. So I wanted to ask also, um, for investments, let's say you want to invest in probably land or euro bonds or basically any investments, stocks and the rest. And let's say you want to invest like 30 million naira, right?
Mm.
Are they going to charge you? Are they going to charge you as an allowable expenses? Because I mean, it's from your profit you are investing to somewhere else. It's not like it's a turnover to the business or you're buying goods or something. It's just you making investments. So are they going to take it as it's part of the company? You're doing it for the company or what?
Okay, so investment is not, you cannot tax or you cannot charge investment against your revenue. So if you look at this, okay, let me share that this thing again, right? The way, let me see. Hold on. Okay, so the way financial, first of all, before the tax, this thing, all of that comes out,
Mm-hmm.
right? Uh, it is basically your financial report. And the way financial report works is every transaction is basically basically has two legs. We call it the credit and the debit. Now, if you get money, let's say you make, let's just consider this 78 million naira like here says, right? Is a one time, let's just say it's one figure. You make 78 million naira into your business, right? That goes into sales account. So this account becomes, so you target sales. Now, the money that you receive, so that now goes to your credit account, right? The money that you receive now goes to the debit side, which is the bank. Okay, so it's one transaction, but it's going into two different places. One goes to the sales account, the other one goes to the
Mm-hmm.
debit account, right? Which is your bank. Now, for investment, right? When you make an investment, you are making the investment from the bank, right? Your sales remains, nothing happens to this sales account, right? So if you are posting your investment transaction, what you now do is you now credit the bank, right? With, let's say you want to invest 70 million naira. You credit the bank with 70 million naira and you debit you now debit again investment account 70 million naira. So in your financial statement, you still have 78 million naira, just that you only have 8 million naira left in the bank and 70 million naira left in your asset account. Remember, your sales, nothing has touched it, right? So if peradventure you have expenses and all of those things, right, you calculate it against that 78 million naira. So let's say, obviously, because
Sorry,
you've
sorry,
bought all,
I'm a bit
you've
lost.
confused.
Yes.
It's a bit technical. So what I'm just trying to say is, right, when you are even recording those transactions, first of all,
Mm-hmm.
I just need to understand that this the figures itself, right? The investment you're making does not affect your sales amount. So, like this thing I've displayed right now, right? Investment is not something you can charge against your sales, right? That's basically what I'm just trying to establish. Investment is not a transaction you can charge against your sales. So now, if you now buy like an asset you're using for the business, so let's say the MD bought a car or you bought a machine, you bought an
No,
equipment that you use for the business.
I'm not
No,
talking
I
of
understand.
cars at this point, right? I'm mostly talking of like euro bonds and shares and
Sure.
stocks,
Okay, so
you know. So
simple
let's
answer
say,
is you cannot charge it against your for tax purposes.
sorry, I need to understand a bit. Let's say you have this 78 million naira in your
Mm.
account, right? And part of your expenses, you withdraw the money, like in this operating expenses and the rest, and you withdraw, there's a this thing written there, 30 million naira for investments, you know, or 30 million naira for euro bonds or something like that. Will the taxman say that is a non-allowable expense
Yes.
because it's for a personal, but I mean, it's for the company?
It's not about personal, whether it's for the company or not. If you want to make investments, right, they would
Mm-hmm.
assume that you should be making investments from your profit after tax, not before tax.
Mm,
So it's not investment is not an expense for the business. You call it an investment. So it is
mm-hmm.
not a qualifying expense. They are two different things.
Okay. So,
Because even when you get income from that investment, right? Let's say you get
mm-hmm,
income from that investment, and
mm-hmm,
the income that they are getting from that investment, they are paying you from their profit after tax. You probably will remove withholding tax and all of those things before they pay you. That income self, you will not declare it here as part of your taxable income, because then that will not be double taxation. Because wherever you invested that money, they assume that they've already taxed it there. But I'm just going very far from the this thing. What I'm just trying to say is it is an investment. It is not the business expense. It is not. So you see this 78 million, right?
mm-hmm.
The only thing you can remove from it, it is expenses that uh, basically uh, help you to make the 78 million naira. That is the idea.
Okay.
The investment does not help you make 78 million naira. You get the point.
Mm,
So it's
yes.
more like a matching principle. You can only deduct what helps you make that money. Nothing else, nothing more.
Okay. So if you are say you're investing in a land now, and you put the description as company's property or something like that. So that's is
So
for the
if
company, right?
in that case, land is different from buying bonds and shares.
Mm,
The land now, the land now, is it something that the business, maybe the business is getting so that they can have their operations there? If that is the
well, no,
case, then
that's
that
the idea is, I mean, the idea of the class is to put the narrative in your way to favor you paying lesser
that's what
tax,
I'm trying
right?
to explain to you now. So the
Mm-hmm.
story now, that's where your storytelling comes in. You
Yeah.
got the land so that you can probably establish your operations there, or whatever it is. Then that one now you now have capital allowance for that.
Okay, so it becomes an allowable expenses, right?
Exactly. Not it's not it does not fall under expenses, and that's an asset. So for assets,
Okay.
I didn't
Mm-hmm.
add that. So for asset, that one is capital allowance. Now remember the first asset you mentioned, which is investment, which is also an asset. That
Mm-hmm.
one does not concern the operations of the business. But for land, you
Oh,
can
okay.
claim that it concerns the operation of the business, that you
Oh,
want to
oh,
operate there, or you are trying to expand, that kind of a thing, right? It concerns the operations of a business. So the things you can claim are what concerns the operations of the business.
oh, okay, okay. I understand. So judging from, sorry, this is my last question. So judging from this screenshot, right? This last space that says manager's bonus. What is this one?
So it's the companies this thing, they give bonuses to their managers. I mean, they meet
At the
target
end
and
of the
all of
year
those
or
kind of
what?
things. Not yet. I think this was is a weekly this is a logistics business.
So
So
that
it's a
means
weekly
it's an
bonus.
allowable income, the
Yes,
allowable
yes. But not
expenses.
for it's an allowable expenses. However, because it's a bonus, right? They will
Mm-hmm.
charge withholding tax on it.
Oh, okay. Okay.
So they will
No
tell you that
problem.
you're supposed to withhold tax and pay that tax on the manager's behalf.
Okay. Thank you so much.
All right, sir. Please, I have a question.
Yeah,
Hello,
good
sir.
evening. Go ahead. I can hear you.
Okay. All right, sir. So it's about upgrade of a business name to company. So while
Okay.
some people are saying upgrade, some people are saying do not upgrade. So I need clarification about that.
Oh, okay. So basically, first of all, we have to acknowledge that this is a tax class, right? And my recommendations are basically tax bias. Now, for tax purposes, I would not recommend that you upgrade unless basically maybe. So I would not recommend that you upgrade simply because with what's it called now? When it comes to business name, your tax liabilities are lesser. The only thing you'll be worried about for a business name are basically transactional taxes, which include value added tax and withholding tax. That is, if you get to that threshold, the same threshold that the limited liability is. Right? Me, I'm still confused whether the threshold is 50 million or 100 million. I've checked all the tax law. It's 50 million that is there, but they're telling us it's 100 million. But that's a story for another day. Uh, so my point being, right, there's no benefit when it comes to tax purposes, right? Now, as a business, the question will now be, okay, what are my goals? What am I trying to achieve? For business, in the advantage is being that okay, you pay lesser taxes, you don't have to do compliance, right? So for business, you're only paying. That's obviously if you're doing above the threshold, you're only paying value added tax, withholding tax for when it applies, right? Then taxes for your staff payee, right? But with limited liability, you have what's it called? An extra tax to pay, which is the company income tax. And beside the company income tax, right, you have the obligation to file audited financial report, right? Because you're a limited liability company, you're obligated by law to file proper financials to be able to claim the exemptions or whatever have you, right? So it's not just you telling them that, oh, okay, you're a small business. So no, no, no. You have to actually get a proper audited financial report, right, to support whatever it is that you're claiming. So that aside, but there are also other advantages, like for instance, now the business name you cannot get a taxpayer certificate for that business, but for the limited liability company, obviously they are filing an income tax, so you will get a taxpayer certificate, right? With that's with limited, so you get taxpayer certificate. With limited also, you can, if especially when you have other people on your team, you can get you can do structure, you can share. Okay, oh, you have 20%, you have 30%, you have 50%, that kind of thing is the structure is properly stated, right? Even in your documentation. Then you also look at how people perceive a limited liability company. when compared to a business name. Business name is just an extension of yourself, but limited liability is another entity on its own, right? So when you talk about access to loans, access to grants, access to investments, you can only do all of those with limited liability company. So I always say for tax purposes, right? If tax is your only, let's say you're just a small business owner, you don't care about getting loans, you don't care about enlarging your business, you really don't care, and your customers or the clientele that you deal with, right? Let's say you have a shop, they don't require you to have a tax clearance certificate like all those contract people, right? Or people in the financial services who deal with very large bulk of money, then you have no business getting an LCC because it's just a lot of compliance stress that you are not benefiting from directly. So business in that regard will be your best, your best. How would I put it now? Your best option.
Okay, so thank you. But considering the fact that I don't know how to put this, but there's something about 800,000 naira turnover in a year, that if you exceed the 800,000 naira turnover in a year for a business name registration, it means you are not exempted from tax. You start paying tax. Do you understand? And I think
I
for
understand. I
a lot
understand. I
of
understand that. Okay, so I get that, right? So the thing with the 800,000 naira, what a lot of people or business owners are getting confused with is the fact that first of all, you want to ask yourself, okay, let me take you through another angle, right? There are two major tax bodies: the federal government, which is FRS at the moment, and the state government, right, which is the individual. Now, the federal government, we can all agree that they will not, the FRS, they will not charge a business in income tax, right? The only thing they will write you for is value added tax, right? They will not ask you for, what's it called? Income
Company
tax
income
for a
tax.
business name. And they will not ask for company income tax. So it's out of there. The next people now is the state government. Again, the state government will not ask you for your business name income tax. What they will ask you for is your person as the individual. So now, which means that as an individual, the question will not be how much income, right, is your, because we even had that, even the last class, I think in the last class, I even presented the case of where somebody who has a business name was written. There was nothing like, where is your income tax for that business? It's just those transactional taxes they will ask you for, PAYE, VAT, all of those things. The business as a going concern, right? Okay, let me not use big accounting words. The business as its own, the business name as its own, right? Nobody asks you to pay income on tax on the income of a business name. What they will ask you is how much are you as an individual paying yourself? The idea is simply is because they don't even expect you to have just one business, right? You could own a business name and also work as a full-time employee. You could also own investments, right? That you are getting, what's it called, interest from. You could even have up to three different business name, right? The idea is, as an individual, how much are you getting from all your separate sources of income? So even if they not tax you based on one business name, they are limiting how much they can actually get from you in the real sense of it, right? So the idea is not to tax your business name, right? Business name was basically designed for small people who want who want a legal name to probably operate, right? To get some trust and all of that. But nobody taxes the income of the business name. What they tax is your income. That is how much. So if you have a business name, we would want to assume that you pay yourself a salary or you withdraw a certain amount of from the business for personal use within a period of time. So that money that you've withdrawn for your personal use, they expect you to declare that money. It is that money now that they will tax. Because if you look at the different tax bodies, right, what are their jurisdiction, first of all? The FRS will not tax your business name. Even Lagos, LRS also will not tax your business name income. So the only income they have access to is your personal income, you as an individual, right? Then that is what you state and you file your taxes on. So it simply means that out of the two steps, nobody is taxing your personal income. It is just a loophole that they put it there. It's not me that put it there. They know why they put it there, right? To help small business owners not to buy because especially, like I said, nobody is even giving the business name. Because if they say they want to charge the what's it called now, business name income tax, it also means that if you are paying income tax, you should be entitled to a tax clearance certificate. Nobody, you can check. There's no state or any body that gives a business name a tax clearance certificate. If they are putting tax, they're just putting your business name there just because maybe especially for some of those things that do manual this, they just put it there to to make your conscience out of ease because they want to collect money from you. But ideally, a business name, nobody gives business name tax clearance certificate because the business name does not pay income tax.
Okay, thank you very much, sir. Thank you.
Hello, good evening.
Excuse me, sir.
Good evening, Mena. This is Henry. I'm
Okay.
just joining you for the first time, even though I registered about 2 weeks ago.
Welcome, sir.
Thank you. My pleasure. I don't have a very firm idea of what the taxing is about. For example, we have a business name, and we're into sales of feeds, fish feeds.
Feed,
So,
animal feeds.
fish feeds, yes, fish feeds, animal feeds.
Okay.
So I want to know, are we exempted from any type of taxation, like VAT and all those things? And then
Yes.
secondly, we are
Okay.
exempted.
Yes.
Yeah.
Animal feed.
Okay. Since it's a business name, do our turnover, because we have to be buying a lot. You know, when you buy and sell, the profit is so small. It's about just less than 5% in most cases. But you have to invest a lot of money in it. So I don't understand, first of all, so I have some more questions. I don't understand how the taxing is going to be done, because the money entering the turnover is not profit, it's capital. So I don't know what they're going to be taxing them. Is it the money I'm paying myself as salary, or is the money that's entering the account?
Okay. So technically, for you in your own case scenario, you might not
Mm.
necessarily be paying any tax regarding that business. One, because it's a business name, which means that you're not paying any company income tax, right? Then two, your type of trade is exempted from VAT. So the only thing you'll be doing if you register with the tax office is basically filing nil on a monthly basis. Again, because your type of trade is exempted from, obviously you're doing agricultural, this in a farm feeds and the rest. So there's no VAT attached to that this thing, right? Because obviously the government is trying to make food affordable for everybody. So your feeds, that your sales of those feeds that you produce. I don't know. You've produced the feed now. Sha,
No,
what
we
I'm
don't
saying is, it is not.
buy. We buy and sell. We are traders.
Oh,
We buy and sell.
okay. So
Uh,
it is not a vatable transaction. That's what I'm just trying to say. So ideally, the taxes you would have owed is what's it called? VAT, right? So you're based on the nature of your business, it is not a vatable transaction. The only thing now you might not maybe have is the only liability I see that you have is payee if you have staff and
yes.
withholding tax for certain transactions, right? That one,
Which,
if you have maybe, for instance, that you employ,
which one is withholding tax? Which one is withholding tax?
and
What is
so
that
withholding
about?
tax is just a tax that you withhold from a service somebody renders to you. An example is, for instance, if you hire me to do a job for you, maybe an audit for you, or basically a contract, or maybe you hire a contractor to maybe come and fix a new shop for you, for example, right? You may expect you to withhold a portion of that money and pay tax on that person's behalf.
In Nigeria,
Yes. So you pay taxes on people. Withholding tax required. I don't think withholding tax trended recently with regards to all these investment with banks, like treasury bills, short-term investments. So that's basically it.
you,
So, but
you,
especially when you're not paying VAT and the rest, people might not even really look at your withholding tax But in any question, that is the only taxes they might ask you for, because of your type of registration, will be, I'm just telling you, is withholding tax and payee for your staff, right? Those, that if you have any staff. If you don't have any staff, then obviously your own personal income tax. And I will actually recommend for somebody that probably will not be paying any other form of tax, you probably want to declare something reasonable and pay, so that nobody comes to disturb you so much.
Okay, so even if we are using, apart from normal banks, we are using is it money points and all these other, or this POS thing. Is
Yeah.
there
No,
any,
so they're all regulated by CBN now. So they all have obligation to report to CBN.
does it affect our taxation in any particular way?
No. A bank is a bank. It does not affect your taxes in any way. So Money Point is a microfinance bank. They are all banks. It's just that they operate online, right? But they are all banks.
So for now, as a business name, what we should worry about or think about is our personal income tax and our
Yes,
staff as payee.
yes. Staff pay.
Basically,
Then
those are the
those are the two major taxation, and those ones that are controlled by the state, right? So
yeah,
because it's a business thing, what you wear is your state
state.
regulation. The only thing you'll be doing with FRS, which you should, is just to file, so register and start filing your NIO. So you just go there and file your NIO, right?
Okay,
The
so
only tax,
what we start with FRS? Is it FRS? FRS. So it is
yes,
compulsory, you must register with them.
it's part of the compliance this thing that you register and filing NIO.
Okay, even for a business name.
Yes.
Ah, that's interesting. So that means no matter the turnover we have every month, all we have to worry about now is our personal income tax and our pay.
Yes, solely
That's
because of the registration that you did
okay.
and the type of business.
Okay, that's interesting. Okay, for now, let me yield the floor. Maybe as we have discussed, I will come in again. Thank you very much, Mama.
Okay, sir.
Evening, Mena.
Good
And I this
evening.
is Cynthia. Yes. Okay. Like the last person that spoke. Yes, mine is business name, trading too, and then I know all I have to bother with is PIT and VAT. But then this thing about this turnover of 50 million, just like you said, okay, he's in feed, I'm not in feed. Okay. Now, if I use my capital, it's my capital that's going, and in a month I can do that 50. It's not just in and out. So would they be taxing me because that's not profit for me? So that's where I have a problem and I need clarification. Do you understand what I'm saying?
Yeah, I understand what you're saying. So,
Yeah.
the value added tax. So let's just deal with the taxes that you owe, right? The value added tax, which is the only tax that the business will be paying, right? Is not
Apart from
is
my
not
own PIT.
Yes. So that
Okay.
tax is not a tax on whether it's your capital or your profit. Value added tax in their eyes is basically a transactional tax that you are giving to the third party. So it's not it has nothing to do with the money of your business. They are
Sorry, come
saying if you're
again.
selling,
Come again. Sorry.
so
Let me
in the
understand
eyes of
that.
the taxman, right? What I'm saying is in
Mhm.
the eyes of the taxman, that tax has nothing to do with the money in your business. What they are simply saying is if you're selling a product for 10,000 naira, add
Yes.
750 on our behalf, charge it to the customer and pay it to us.
Okay. So they're not looking at my statement and saying, this money went, this money didn't go. I would tell
No, so
them.
they are looking at your statement because they expect that ideally, again, like I said, you are charging the money on their behalf. So that money that you're charging, on their behalf, they'll pay it to you now. So if at the end of the day they pay you 100 million, for example, because they've expected you to charge 7.5 on their behalf to your customers, they now expect you to give them 7.5 of that 100 million.
Okay. So how would they know what my sales figure is? Or I have to tell
You
them.
tell them.
Okay.
You tell them.
So it's
So
what
that's
I've said.
where compliance comes in.
Okay. As long as it's what I say that goes. Okay. That
It's
makes
not
sense
as
now.
long as what you say that goes now. They have access to the law have made it so that they will have access. So they will ask you, right? And if you lie, they will just basically check or confirm with your bank, write to your bank to provide all your DC. So
So
lying is
any
no longer
inflow
an
into
option.
my account is supposed to be sales.
Ideally, it's supposed to be sales. So if it is not sales, it's not left for you to prove that it is not sales with supporting documents.
Wow.
So if the inflow is coming from like your own name, director, they'll know that, oh, okay, this is obviously director's contribution. They will not bother. But if it's coming from a different name or a different organization, you have to prove with a third party documentation that it is not sales.
Okay.
You get the
All right.
point. So is it
Yes.
a loan? Why are they sending you
Is
that
there
money?
no
Is it a
way
loan?
one
What is it?
can lower this thing?
Sorry?
Is there no way to lower it?
The only way to lower it is if you obviously you have to file, right? Maybe you under declare, and when they come, you negotiate, say you don't get money, and you beg, and you probably come to an agreement. That is the only way. But ideally, for VAT, it's actually very
Will they be
straightforward.
checking everybody's account? Will they be checking everybody's
Sorry?
account in this Nigeria? Will they check everybody's account in this Nigeria?
No, so how it works is they won't check. So they will leave you to be doing your business. Obviously, they're not expecting they are not expecting to come and check your account every month. But they can leave you for the next 2 years. And when they come, you have to pay for those 2 years that you've been owing. They don't check. So if you I don't know how long you've been doing business. If you've not been served, it's basically because at the moment their data mining this thing is a bit restricted. Most times they rely on their own personal investigation or data from Asaba. I say Asaba, Abuja, right? But at the moment now, or currently, or from next year, these offices now will have access to all of those information. So getting data will no longer be a problem for them.
Okay, so this starts from January, we start paying.
Tax is already ongoing. I'm not saying from January. If you have not, I would recommend that if you have not, you don't want to
The
wait for them
process
to
of
come first.
registering is not
Uh-huh.
I mean,
So
process of
it's better
registering.
for you to register and get ahead of it and start filing from Uber. Because if they, for instance, if they come and meet you now, right, and you've not registered, they will want to charge you from the day you begin business. Right, that's one thing I've been preaching. But if you go now, you can declare that you just commenced business
No,
this
I've
month.
already gone. It's in process. I'm waiting for them to give me my tin. So,
Okay, so that's good.
okay, all right.
I
Thank
hope
you.
what was the commencement that you declared?
This month now.
Okay.
And the first
Good
month. Don't
student.
worry. I learned well. Okay, thank you very much.
No,
Right. Okay.
Good evening.
good evening. So I think you'll be the last person because we have just like about 8 minutes to go. Okay.
Sure, no problem. Thank you. Actually, I have a lot of issues because so many people are giving me different opinions. That's why I was actually like, I'm going to make your class today. I've taken over my parents' business. They've been into the business for over 15 years. And I think after the registration of the business name, they're into this plastic recycling. They never did any CAC or anything again. They just opened the account and they started operating it like that. So like 2024, I was going into a new company as a supplier and they requested for my CAC and all that. And that was when I now found out that my business name does not even exist in the portal anymore. So I had to renew the business name and everything. But I still use the old account, right? That account doesn't have a TIN, it doesn't have anything. I've never paid tax. Seriously, I don't even know how to go about the tax thing. Now, my issue is this. the companies, I think in preparation for next year, they are asking everyone to bring the new tax forms.
ID.
And yes, I have for the new one, I just got the thing, I think last week. Because when I registered in 2004, they didn't send it to me. So I just got it last week. Now, this new business name, there's no account linked to it. So because the companies are asking for the business account linked to the business name. So how do I go about it? Do I send them the old accounts? And if I do that, do I now have to pay tax on the old accounts? And
So honestly,
do I just open a fresh account and do start business with that?
so yes, that's what I would recommend for you. Open it first of all, like you said, the other account or the previous one has been deregistered with CAC. That's because you are not filing your annual returns. I'm not a CAC person, but I know well enough that if you don't file your annual returns for a period of time, they first of all declare you inactive. Then after that, they deregister you, right? Which was what happened to you. So that business is no longer occurring or no longer in existence. So the only reason you've been using the bank account before now is because obviously they've done the initial what's it called now, the initial documentation, and there has not been any need for updates. But I can tell you for free that with the new tax law, you might be required to put your what's it called, your TIN and all of those things, right? And if you don't have them, you might not have issues with that account. So if you can, now that the account is still working fine, before your money go hook for there, remove the money and open
Okay.
what's it called, the new one, register it with right now. So you can't even open a bank account without a team, right? So once you get your bank
Yes.
account, move all your funds there and start operating from the new one, which also even helps you because obviously you just started operations this year, right? So that's basically what I would recommend for you. I would not recommend that you use that account going to the next year, because if they now decide to just like the way they did with BVN, if you don't have a BVN on an account, you can't use it until you update it. In that's your case now, you can't get that thing again, even if you try, right? Because that business is no longer existing. So you don't want your money hooked there. So I would recommend that you start afresh and
All right, thank
start
you. I
with the
also
other
have
account.
another issue. Now, my monthly turnover is over 100 million every month. Should I
Okay.
stick to, and my business is not really something that I can charge VAT for, because it's mostly like plastic waste, like all these drip bottles, the deformed bottles, or anything
I
deformity in
understand.
companies.
You do export, Sabi?
Sorry?
Do you export them?
The network is breaking. I can't really hear you.
Do you export them? Do you export
No,
them?
no, just in Nigeria, within Nigeria here.
Okay. I think somebody had a similar case, but it was with Loma, right? Ideally, on top of my head, you can say, okay, it is plastic waste and all of that. It should not be taxable, right? But I cannot tell you now in this call,
Because when
right?
I
So
buy
there was
from the
no,
companies, I pay VAT. When I
when you
buy
buy
them
plastic.
when I get the raw material, like the waste from the companies, I pay VAT on those items.
So who do you sell them to?
So I'm asking, how do I charge VAT for that? Do I add it to my cost price so that the customers don't start, because people now, when you tell them you have to pay 7.5, they will say no. And this 50 million thing they are saying, is it that I'm only eligible for VAT, or is it that the total turnover they will now remove their whatever percent they want, or it's just VAT I'm paying?
So that's the first of all, right? Now it's even good. You are paying VAT when you are buying. So that VAT that you are paying when you buy, right? You can remove it from whatever VAT that you owe. So it means that the VAT that you'll be paying to them will not really be so much in that case. I don't know if you understand, because there's what we call input and output VAT. So whatever VAT that you've paid to the government, because technically you are paying VAT to the government, right? And that thing too, going forward, once you've gotten your
Yeah.
thing, update whoever you're buying from. Sorry, let me drink
Okay.
water.
Sorry.
So update whoever you are buying from, right?
Yes.
With your team. And if possible, you can check from your own dashboard to make sure that they are filing it on your behalf so that you can claim it. I don't know if you understand. So if they file
Yes,
it
I do.
using your team, right, it will reflect on your own dashboard that okay, you have VAT, whatever that they are filed on your behalf. You get the point. So that's basically. So the idea is whatever VAT is paid to the government, right? You
Yeah.
should subtract it from whatever VAT you are owing to the government and pay the balance.
Okay.
So in your
So
own case, especially since you pay VAT,
do I need to switch to a limited, or I should stick to my business name?
again, like I said, business name does not restrict the amount of money you receive with that account, right? And for your kind of business, unless you have other use for tax purposes, I will always tell you no. If tax is your only consideration, right, I will always tell you no. But if you have other considerations, like you want a tax plan certificate, you want
No, I don't need
investment,
tax clearance or anything. I
uh-huh.
don't need loans or
Just
anything
putting it
like
out
that.
there
I
so that
can.
you understand your decision making. Hello?
So I should just stick to my business name, right?
Sure, sure. Does not restrict you with in terms of your bank account.
All right. Thank you very much.
Okay, I think it's about time. Sorry, we started late. I kind of slept off because I had to shift.
Mena,
Okay, okay. After this one, we'll have to call it a good night. Okay, sir. Please shoot.
thank you very much. I also have a consultancy firm, and I'm
Okay.
paid there.
I can hear you.
And already, I also have other consultants who work with me, but it's my name that is used for the business, and I have to
Okay.
pay other consultants. So the issue here is, and you know, in Nigeria now, you still have to wet the ground. So before you can get the job. So the issue now is that how do you account for the whole money you spend wetting the ground? Because it can be much.
So you have to call it something else.
Like
So
what?
you can call it welfare for the team.
Welfare. Whose
Yeah, you can call it
welfare?
welfare.
Welfare
You
to
just said
who?
you have a team now.
Eh?
You just said that you have a team now.
Yes, I have a team. And I
Uh-huh.
also pay, I'm supposed to be paying, I paid them their own fees from my
No,
own.
you just asked what you can. So the welfare could be the money you use for the food in the business day to day. It could be medical assistance and whatever it is, right? Welfare could be anything. I'm just saying because if you put handshake, I mean, put gift and all of that, they will not allow it. It's not allowable, right? It's not allowable. So what can you call it that is close, that is allowable? That is what you should be considering. I don't know if you understand what I'm trying to say.
I understand you, but okay,
Uh-huh.
maybe when we come next Friday, we'll go more in depth into it. For now,
Okay,
let
sir.
us,
Okay.
even though we started very
Let's
late.
have a good night's sleep. Okay. So
Thank,
Friday classes will be from 8:30 for in consideration with our Muslim brothers and sisters. Because I
uh,
understand that they have what's it called prayers on Fridays. Okay. Thank you, everybody. Good night.
thank,
I should. Yeah. Thank you very much.
good
All right.
night.
Good night.